More on Amazon and Apple's big earnings. Let's bring in Fast Money friend Gene Munster. He's a managing partner of Deepwater Asset Management. Gene, great to see you. I don't know where you want to start. We got so much to deal with tonight. Let's go with Amazon here. Is it worth this 8% pop?
It is, and ultimately, Debo framed it in perfectly, is that AWS stability commentary was powerful. That led investors to look for accelerating AWS growth in the back half of the year. And then separately, what we saw in the profitability, that shift to earnings, I think that's an important, powerful segment that has not been part of Amazon's story. If we look back over the last 7 years, the average EBITDA margin on their retail business is 2.6%. If they can add some efficiency to that, this can be a 5% business. This is a segment that investors have longly forgotten about, the retail opportunity. So I think that's a big piece, a big opportunity relative to where Amazon is today. I would say this, Mel, is that Amazon had a better quarter tonight than Apple. It's pretty clear to me. Apple was in line. But if you look at Apple versus Amazon and which of those two companies to own for the next 5 years, I would take Apple over Amazon in a heartbeat.
Would you rather, if you
wow.
by Gene
He allowed
Munster.
to do that? I guess he is. Yeah,
Just
he's
did.
in the Parthenon.
But why? I mean, is Amazon going to be just lumpier? I mean, we've seen this. You know, they turn the spigot, they turn it off again and again and again, and so it's a little bit more of a roller coaster. And Apple's sort of been steady Eddie.
You said the perfect words there. Lumpy is not good for investor confidence. Steady is. And Apple hit it right at the top. Dan mentioned I was going to say something about this, and you read my mind, is that the key takeaway from Apple's quarter isn't the results. It's that the active installed base grew. They said that in the headline. They know how important this is. That means that the business, the flywheel is working. That means that the business has continued to be steady, and that is opportunity for a multiple expansion. I know that sounds hard to believe, but the second piece, and your astute panel has been orbiting this topic, but I want to put some finer point on it, Melissa, is the India opportunity. China in 2010 was a $3 billion business. In 2016, it was a $59 billion business. It grew basically $55 billion over 6 years, now 19% of total sales. India today is about a $12 billion business. It's 3% of revenue. If it gets to the same size as China over the next 6-7 years, that alone, India alone, can add 3% annual revenue growth to Apple Store for the next 7 years. This company doesn't need to grow at 15% for investors to be happy. If it can nail between 5 and 7%, I think the stock continues to move higher, and they can do a lot of that on the backbone of India.
Gene, it's Karen. Thanks for being on tonight. So you said Apple multiple actually could be higher, even though that maybe sounds kind of surprising. Where should the multiple be? It's pretty high.
It's high. I'll let kind of the broader investors put that together. I would just say this. There's no other company that has the stability that Apple has and the optionality around revenue growth. I put this in the same category of Procter & Gamble, Coca-Cola, Clorox, those kind of steady consumer staples. But none of those have the upside opportunity. We haven't even talked about Vision Pro. Don't get me started. I've used the device. I think this is something that's going to be additive. It's going to be a few years from now, not to mention if they do something in automotive. And those other consumer staple companies they're not even close to that conversation. So I'm looking at this over the next 3 to 5 years and thinking about where the conversation is going to go. And I think when you put that together, it warrants a higher multiple.
So, Gene, let's talk about Amazon for a second here. When you think about AWS and accounting for 70% of their of basically their operating profit, okay, and we know that we just saw on the retail side, Guy just mentioned the operating margin better on the retail. What excites you more about this story? Is maybe the operating margins getting better on the retail front, or a stabilization in the AWS, and they see a really nice growth trajectory as there's a lot of excitement in and around demand for their compute as it relates to AI, or are they both really good?
I'm more excited about retail. I understand that is a standard deviation, a light year away from what most investors are talking about today. Retail is 75% of their business. I talked about the margin profile over the past 5 years, 2.5%. It was 4% last quarter. If they can sustain 5% plus with some of these efficiencies that they're starting to drive in their distribution, you can kind of circle back to the retail business being an exciting part of the story. And I buried the headline, is that retail units grew 9% year over year. It was 8% year over year in the previous quarter. And that's with all the proper comps with Prime Day and that those Prime Day all hits in the September quarter. So ultimately, I think the retail business is the crown jewel of Amazon and hasn't had the flash that AWS has. But ultimately, that's, I think, what's going to drive shares higher in the long term. I still positive on Amazon. I would take Apple ahead of Amazon, though.